Early 2020 to mid 2021, so in about 14 or 15 months, I was able to 8x my money, which was, unbelievable run. Obviously, that was a super retail friendly time. It was, very easy to do well if you were buying anything that was kind of speculative. So yeah, I had an unbelievable period where I got an 8x return in a little over a year. The index overheated. I mean, people say that now. They said it last year. They said it in 2024. Was the index overheated in 2024? Retrospectively, we can say that the answer is no, right? But people were saying that it was at that time. We have had a pretty phenomenal bull market in stocks, even though interest rates are at elevated levels. And what that tells me is that you have two things. First of all, if the economy dips, we have ample room for rates to go down and create a shock absorber. The second thing is you could have rates just go down anyway, right? If you look at PRAX, there's almost no discussion of the stock on social media. Nobody's talking about it. Almost nobody's writing articles about it. I think myself and one other person have written an article about this stock on Seeking Alpha like in the past 6 months. Hey.
Thank you so much for agreeing to do this.
Sure thing.
I got a lot of value from you like over the last 6 to 12 months. So I thought like you are very much capable in terms of what you're doing. So I thought like I just want to introduce you to my community or the subscriber base, which is very less. It's a subset of people from India, so who is very interested in investments. So yeah, I joined your Discord server last December after your FTAI stock, right? Like that did so well for me, and then like I started following you on most of the other stocks. So
Sure. I'm glad you got some value. Yeah. 2025 was a great year. 2026 so far hasn't been quite that good, but I am still beating the index by a bit. So yeah, it's been overall a good 18 months.
right, the same thing for me. Like 2025 was good. Like I was able to make a decent like a killing, but like it's not working out well in 2026.
Well, I don't have any formal background or like training in finance or anything like that. I'm kind of self-taught. My original background was politics, actually. I have a master's degree in political science. I was a staffer on a presidential campaign back in 2008. Kind of got out of that world a little bit, started doing some creative stuff, and then, in 2020, I said, okay, let me try picking my own stocks. Let's just see if I can beat the experts. So I bought, mortgage REITs in December of 2019, probably the single worst thing you could buy at that point. Almost all of them fell 50% as COVID began. So pretty bad start to my investing journey, but very shortly after that, I did very, very well. Had a very phenomenal 2020 and 2021. I very briefly joined the story trading community with Ben Rabizada. So I briefly became like an employee of theirs, and that didn't really work out. But I was able to kind of still keep doing some trading. 2022 obviously was difficult for a lot of retail people, but after that I feel like I have kind of picked myself back up and been doing pretty well. Because I don't have necessarily a specific finance background, I do consider my core strength to be reading comprehension. I think most people simply don't have the time or the interest to sit down and read reports. They're not going to do it. And so if you sit down and you do the work, it is boring. Most of the time you're not necessarily going to learn anything because there isn't anything there to learn. But occasionally, if you read 10 of these reports, one of them will have really important actionable information. And I would say that, picking up on that, especially if it's kind of complicated, not necessarily easy to digest for people, not necessarily easy to put into a spreadsheet. That kind of thing, I would say, is my edge.
So, can I ask like how much time that you spend for these kind of stuffs? Like I don't know, like people will have like some other like 9 to 5 jobs or whatever. I think you are like self-employed, or like how much time does it demand for this kind of analysis?
I mean, that's a really good question. It kind of depends, and I think all of us have been in situations where we've spent a lot of time on something and it ends up not working out, and we think, wow, I would have been better off being on vacation and not trading at all, right? There's always moments where you can say that doing nothing is better than the work that you put in, and so it's hard to put a specific amount of time. And then occasionally you spend a short amount of time on something that has a huge impact. So I'll give you an example. I was on vacation recently, and I said, okay, while I'm traveling, I don't want to think about the stock market. There's no earnings season. I can just enjoy my vacation. And my wife fell asleep on a long train ride that we were doing. And I was like, okay, I'm going to break my rule here because I'm really bored. And I found a stock, Prax, that's ticker PRAX, that I got really excited about, right? I've since published a video article on Seeking Alpha about that. I don't know if you saw that one yet. But yeah,
I listened to the
now,
video actually.
yeah.
The video was
Now,
great.
I'm glad you like it. Now, that stock ended up making me so much money that it more than paid for the cost of the vacation itself, right? That's how much money I made from that stock. So, how much time did I put into that? It was just it was about 3 hours of research that I did on that long train ride. That was it.
Can I ask your entry position in Prax? Like
You
when
mean
did you?
when did I buy it?
Yeah.
Okay, so yeah, this is an interesting story. So I was researching this around the end of June, and it was a long weekend. I think it was the June 19th weekend because I remember forgetting that June 19th was a holiday and that I couldn't buy stocks on that day. And then I remember Monday morning seeing that there was a news story that the stock had been given breakthrough designation for Elson, one of their drugs, and the stock was up 5%. And I was really upset by this because I was like, damn, I really wanted to buy it. Um, I even actually tried to put in like some limit orders to buy it in like the overnight trading, and a very small amount of that was filled. But I was like, if I had been maybe a little more aggressive, I wouldn't have had to pay the extra 5%. But I just kind of swallowed and I was like, you know what? I'm not going to get greedy here. I'm just going to pay the 5%. So I ended up buying, I think my buy price was just a little under 300. But I also got some call spreads for February. If you're going to buy calls for Prax, definitely buy them for February or later just because you want to give yourself the time opportunity to get those two drugs approved. But yeah, the the thing is, it's not necessarily like a specific amount of time commitment. I can't say you need to give 10 hours a week because sometimes you might put in the 10 hours and you might find no opportunities. And it was, you can say it was time well spent. Not really. It's not necessarily time well spent if you didn't find anything actionable. Sometimes you might put in a small amount of time and you might find goals, and that's all you need to do, right? So I would say for the process that I do, you do need to commit some amount of time, but that doesn't necessarily mean that it will take you that amount of time, like, or even that you're guaranteed to find anything. Depending on what you look at, you might have bad luck. It might be a weird time in the cycle. You might not be focused. Like if you're tired and you're trying to do reading comprehension and you're not really critically evaluating or understanding what you're reading, putting in the time isn't helping you, right? So yeah, it's really hard for me to give a specific thing. I would say that this is my main source of income right now. It is my full-time job. I guess trading is my full-time job, but it's not necessarily the case that you need to do it. I would say if you look at the portfolio that I had in like late 2024, if I was in a coma for the past 2 years and I just didn't change any of those positions, I would probably have more profits than I have right now, just because I was holding stocks like AppLovin and Dell in 2024 and sold them too early. And if I had just not done anything and kept those stocks, I probably would have had more profits now than I did with all my trading. So yeah, it's really, really, really difficult to
Got it.
specifically say how much time you need.
Got it. Like, do you limit yourself to like any industry? Because like recently I've been seeing like you are posting lot of investment analysis on biotech stocks, but like are you industry agnostic or like what would you advise for anyone who is willing to enter in this arena? Like stick to an industry like Buffett or anyone
Mhm.
says, or like
Well, I do think you probably shouldn't have all of your money in one industry at any time because that industry could have some sort of problem or something. There's a phrase, there are no gurus, only cycles. Have you heard that one? And what that means, I think people don't understand that. What it means is that if you are like a biotech guru or whatever it is, and then you have a bull market in biotech stocks, you're going to feel like a genius. People are going to follow you. They're going to be like, oh, this guy knows how to pick stocks. It's like, not necessarily, because most biotech stocks are going up, right? And then when the biotech market crashes, and this is the one thing that this guy knows how to do, his stocks are going to go down, and he's going to be like, oh, okay, this guy isn't good anymore. It's like, well, no, it's just you're just following one industry, right? So no, I don't think you should limit yourself to one industry. I think that's probably a recipe for disaster. I would say biotech is one of the areas that I focus on. I think healthcare in general is a sector that I really tried to focus on a lot in 2020 because of COVID and everything. Originally, I didn't focus on biotech specifically. I focused more on like the healthcare information stocks, stuff that was trying to like digitize medical advertising and records and things like that. But yeah, biotech is definitely one of the areas that I like a lot because it's complicated. I also like anything that is kind of connected to finance. So, you have Nubank, you have SoFi, FTAI. I liked because they were changing the business model to be less of a industrials play and more of like a financial manager type thing. That was the original reason why I liked them. There's a couple of other ones that I'm looking at right now. Owl is a BDC fund manager that was punished really hard earlier this year because of the SaaS apocalypse thing. They made loans to software companies. People thought like Claude was going to put all software companies out of business. I don't believe that that's true. And so I thought that the discount was like a little bit too big relative to, like the actual risk. So that's one that I'm kind of would maybe be my next article if I was going to write another article. But yeah, I would say that like if I had to pick two, like some things kind of tangentially related to finance and then healthcare would be kind of the two. But I try to broaden that so that like FTI, most people wouldn't call that a finance stock, but I would say my way of analyzing it is similar to a finance stock. So like the broader you can be in general, the better, just because you don't want to get caught in one of those guru cycle things.
Just to extend on the biotech space itself, right? Like I was initially like as a newbie or a very recently even I entered into investments, but like biotech is a very risky space, right? Like the probability of success is very, it's like a binary thing. Like not only an expert can understand is my opinion. Like
Yeah, it's absolutely a risky space. If anyone like it comes to me for advice, I would definitely not encourage them to enter that space because it's very, very, very risky. And I also think that the vast majority of retailers play it kind of stupidly because they tend to focus on the early stage stocks, which are the ones with the most risk and the most difficulty of analyzing what's going right with the stock, right? So if you're like even actual like trained scientists and doctors have a really hard time trying to judge a phase one drug, right? It's just very, very difficult to do because phase one studies aren't really scientific studies. That's kind of the dirty secret of biotech, right? You can rig the study, you can pick the patients, you don't have to worry about placebos. You can exclude people from the study if you think that they're going to fail. So because phase ones can be kind of rigged, they're not really true scientific trials. It's very, very difficult for someone to understand if phase one data is meaningful. So that's why typically when I do biotech, usually I focus on early stage commercial or very, very late stage development stocks like with Bridge Bio or Prax, where they have a lot of drugs that have already succeeded phase three trials and we're kind of waiting for the commercial ramp to start. Analyzing the commercial ramp is a lot easier than trying to analyze a scientific trial. And I also think that people just aren't interested in it. Like the average biotech investor will want to buy early stage and then sell when a phase three succeeds. Typically, I'm exactly the opposite. I'll want to buy after the phase three has succeeded, but the hype has started to die down, or I'll buy maybe a quarter or two after approval if you can see that the commercial ramp is actually working. Because I think that that's something that it's much easier for me to actually understand.
yeah, even in terms of Prax, I think Alexa has a PDUFA date in Jan, right? Like it's almost it has crossed all the phase three trials. So okay, I get your point. Like
Yeah.
that way you can limit your risk.
Yeah, I mean, because like if you are holding a stock through a phase three readout, yeah, obviously, like something like 40% of phase threes don't succeed or something like that. So yeah, I mean, you're taking a huge risk there. And then another problem is even in cases where they do succeed, sometimes you can run into problems. So I broke my own rule and paid a price earlier this year. Ocular Therapeutics was one of the stocks that I put out a video on and I recommended, and that one didn't work out. And that was one of the ones that I held through a phase three. The phase three was successful. Um, it was successful for all of the reasons I predicted in my video. Nothing I said was wrong. But here is the problem, right? While the phase three was successful, it wasn't overwhelmingly successful, right? It was a small success. And the market has essentially assigned that as effectively worthless, right? The stock is trading at a very low price because people are saying, well, okay, you technically succeeded, but without great evidence of efficacy, you're not going to get people to actually sign this. You're not going to actually get a real commercial opportunity out of this drug. So, yeah, I think the few times that I have broken my rule, it has been difficult. There have been other stocks where I um I bought a little bit too early and it ended up working out. I think Revolution Medicines RVMD, that one I did make money on. But it was definitely um a very, very volatile and a very, very stressful hold, and that was another one that I kind of broke the rule on by buying a little earlier than I normally do.
But whatever you said is true. Like, but this could happen in Prax as well, right? Like, even though they crossed all the phases, like getting an approval doesn't mean like it will translate into revenue, right? Like what probability will you be assigning to Prax then? Like, who knows? Like, if it has a real market or not? I'm just throwing out a question here. I'm not.
I mean, I did say that in my video. I said that, well, I did kind of two versions of the video. Seeking Alpha asked me to do like an addendum after earnings, so I added that in. But so I don't know if you saw that version, but I said that uh, the commercial rollout is probably the single biggest risk now. And there's kind of two ways to think about that. The first is that because this stock, uh, because there is like such a big market, it doesn't actually need a big it doesn't actually need a huge percentage of it to be successful. So I was talking to someone on Twitter and they said, oh, this drug doesn't have huge efficacy. It's only going to get somewhere between 1 and 5% of the market at peak. And I said, okay, there's 7 million people. Prax said they're going to charge $75,000 for this drug, right? Where they said between 50 and 100. I'm just going to go ahead and say 75. If you have somewhere between 1 and 5%, that's 2.5% at the midpoint, 2.5% of a 7 million market at $75,000 a year is 13 billion. 13 billion is higher than the 10 billion management guided for, right?
For Alexa?
Yeah, for Alexa. So that means that even if you have these like really bearish assumptions, you can still get a very meaningful amount of sales from 2.5% of the target population. That's the first way to look at it. The second way to look at it is you can say, well, okay, it's not curative, right? It doesn't cure you, it just improves your symptoms. And then the second thing is that unlike other diseases like, Bridge Bio's limb-girdle muscular dystrophy thing, this is not a fatal disease. It doesn't kill you. So you don't have to take the drug, right? So you could look at that and you could say that's an existential risk. You have a therapy that's not curative and you have a disease that's not fatal. It's just going to be too difficult to get people to pay money for this or get the insurance companies to pay, whatever it is. If you take that view, and I respect that view, that doesn't mean don't invest in Prax. It means you probably want to sell most of your position after they get the drugs approved and don't wait for the commercial ramp to actually start. That's the position there, because even if you think that the commercial opportunity isn't quite that good or has elements of risk to it, I mean, there's still going to be some upside with the approval process, at least in theory. Sometimes you have a sell the news event, like Replimune got approved and sold off on that. But I think that you can judge if there's going to be a sell the news event kind of by how much retail is involved in the stock. So like if you look at Replimune, that was almost entirely retail. There was all these incredibly rapid swings. There was constant discussion of the stock on social media. If you look at Prax, there's almost no discussion of the stock on social media. Nobody's talking about it. Almost nobody's writing articles about it. I think myself and one other person have written an article about this stock on Seeking Alpha like in the past 6 months. So basically nobody. There has been very little high profile coverage of this company. So because of that, I don't think this is a case where there has been a massive retail run up, FOMO into the approval process. That means I think there's room for it to go up. If Prax is already at $600 or $700 before approval, then yeah, I would definitely take some chips off the table. But like, yeah, that's what I would say is that it doesn't necessarily like if you think that there's a risk in the commercial ramp here, the response is to sell before they report their first quarter sales, basically.
Yeah, I get it. Basically, have an action plan, like, and reap the rewards when the
Yeah,
approval goes through, right? Yeah, I get it.
exactly. Yeah.
Uh, I just want to take a step back from this, Atticus. Like, maybe not all the people would be familiar with Prax or any other biotech space. I just want to understand or enlighten the people who really want to learn the investment business. Like, can you teach us about your investment process? Like, if you're like how to generate a new idea and how to pursue it, or like what kind of a like allocation that you do? Because yeah, yeah, like that would be really useful.
Sure.
Yeah.
Well, I would definitely say that I can tell you my process. That doesn't necessarily mean if you're listening, you should copy my process because everybody has a different thing that they're good at, right? I'm good at reading comprehension, right? I have always been good at reading comprehension. You look at when I, got my master's degree, I had to take this test, and I was in the top 97 percentile for the reading comprehension test. So you shouldn't necessarily say, well, Atticus is doing it this way. I should also do it this way. I'm doing it this way because this happens to be what I'm good at. Whatever you're good at, that should be what you do. There's some people that really like looking at charts. That's not really my thing. When people come to me with chart related ideas, I typically just dismiss the idea because I'm not necessarily the person that's going to be an expert at understanding what a chart is telling me. So you have to lean into your own strengths. You can't just copy my method, but I will tell you my method since you asked. What I would say is that I like to read things, and like I said, I want to get information that you can't just dump into a spreadsheet. If somebody says our guidance is X, okay, you can just put that into an analyst model, and then that becomes the forward PE, right? And if someone screens for a stock, they'll say, oh, this stock is cheap because they have earnings growth, and that's reflected in this low PE or whatever it is, right? As soon as someone says that, and this is a stock that's well covered, that is no longer important information, right? If, on the other hand, you have a small company that's not giving guidance at all, and this is a real example from a stock I picked in 2020, and the CEO gives a investor presentation, not an earnings call, and he says something like, "Well, we think that there's going to be a big rebound in sales coming soon. Not to give anything away, but yeah, we're really, really, really happy with the numbers that we're seeing." I remember seeing that presentation, which there was no transcript for, by the way, no transcript. You had to actually click a video replay to watch this. I suddenly thought, okay, he was going to say numbers, but then realized he shouldn't because the company was not giving guidance, right? When he said that not to give anything away and then paused, and then I was like, okay, this is something important. That was something that if it had been in a transcript, I don't even think you'd be able to see like the facial expression, the body language. It was clear he was, saying something important. Another really good example is go back last year with Bridge Bio. Bridge Bio had an amazing launch for their drug Atrubi, sold off massively, and what happened, right? People said, oh, well, Alnylam is a bigger company. Alnylam has a similar type of drug. They're going to crush Bridge Bio competitively. So it doesn't matter if the launch is good. Alnylam was launching a competitor next month. Bridge Bio doesn't have a chance. Bridge Bio gave an investor chat with Goldman Sachs. Once again, there was no transcript. This is important because if there was no transcript, my assumption is most people haven't taken the time to actually listen to the replay, so it's information that hasn't been baked into the share price yet. They gave an investor presentation with Goldman Sachs in June, 2 months after the Alnylam launch, but before Q2 earnings were posted. And Bridge Bio said, we have seen no competitive impact from Alnylam's launch. April was similar to March. May was similar to April. We have not seen our sales go down in response to Alnylam. And when I saw that, I immediately made BridgeBio my number one position. I bought calls. I bought tons of more shares because I realized, okay, the bear case is dead now, right? And that sentence, we haven't seen any competitive impact from Alnylam. That's not something that you're going to find in a stock screener. It's not something that you're going to find just glancing at a 10K earnings report or whatever. It's information that's only going to become clear after Q2 earnings come out, right?
Yeah.
And then after that it will be priced in when we actually see the numbers. But you have to actually you have to hear him say that and understand, okay, that's information that isn't going to be digested. Somebody might have 10 biotech stocks in their portfolio or something. They're not going to take the time to listen to all these different fireside chats, and even if they do, it takes someone that really understands Bridge Bio to know that the entire bear case was rested on this competitive threat, and if the competitive threat just isn't materializing, then the stock should have been much higher than it was at that moment. So it's like the process is understanding the stock really well, going through earnings reports and investor presentations, actually taking the time to listen, and especially valuing information that's difficult to digest or can't just simply be chucked into a spreadsheet, and saying, okay, this is now actionable relative to whatever expectations are. It doesn't matter what the price of Bridge Bio was at that moment. What matters was that the expectations of what was happening with the company didn't match what the CEO was saying. The CEO could have been lying, but you know, legally as a CEO, you're not allowed to lie. The CEO could not have said what he said when he said that the sales levels hadn't gone down when Alnylam launched their product. If he had been lying, he could have lost his job or even gone to jail, right? So I trusted what he said at that presentation, and I put my money to work, buying that stock because of that. So I hope that does that answer the question?
Yeah, yeah. The one thing which kind of resonated with me was going through the investor presentations, listening to going through the transcripts to find if there are any hidden insights, which not everyone would do. That I really get it, and not just recently with the rise in AI, right? Like what I do is like I get all the transcripts and I feed it into the AI model, so I don't have to spend all the 1 hour. But the point which you said was really right. Like sometimes like it's not just the words, but the emotions and the reactions that the people give it you. So you
Yeah.
have to listen through the meetings, recordings as well. So yeah, actually that kind of answered the question.
Yeah. AI is really interesting for analyzing stocks because, first of all, I think two things are happening. First is that there's a kind of rise of what I would call secondary AI. Like there's a guy on Twitter. I don't want to clown on other people too hard, but there's a guy on Twitter that is called the Claude Portfolio. Have you seen that guy?
Okay, no, no, I've never heard.
Yeah, I do not like this guy, because he talks about Claude giving him stock tips as though Claude is like a singular authority, right? And I have Claude, and I asked Claude, "What do you think of this stock pick?" And my Claude has a different opinion than his Claude.
Yeah,
So, that tells me that either Claude's inconsistent or this guy is feeding Claude specific prompts that are prompting this specific information, and he's treating Claude as an authority, and every time Claude does something right, he says, oh, Claude saw this coming, or whatever it is. So that's the first thing, is AI isn't necessarily like, it can't act like a junior analyst. The second thing is that a lot of the times AI just makes stuff up, right? So one time I was, feeding a new bank report into Claude. This was like 2 or 3 months ago. And I was talking about the growth curve of Mexico, and I said, okay, this growth curve of Mexico looks different than Brazil. And Claude said, yes, and most analysts aren't modeling for that. And I said, how do you know? Like, how do you know that most analysts don't have this Mexico information in their model? And Claude said, I don't know, I made it up. And I said, what? I said, why would you just make up information? And I said, I got carried away with the bull case. And I said, what are you talking about? You don't have emotions. You got carried away with, what is this? But yeah, I mean, lots of times, if you're not really laser focused, AI will just give you information that's just not true, right? And so, yeah, if you rely on that, that's a problem. The second thing is that, like, sometimes you can get information from AI that you're not necessarily, like, primed to understand. So, for example, if I say something like, whatever, how do I put this? You have to understand how important other people were treating the Alnylam competitive threat. That's a really good example. Another problem is that, like, most of the time AI just analyzes text transcripts, right? Again, if there's a transcript that's available on text, it means that anyone can sit down and read it, right? Anybody can take a few minutes and scan it. They can feed it into an AI. The um, the Goldman Sachs presentation that they did in 2025, there was no transcript. that meant it was more time consuming, which is a hassle, right? But in my opinion, that makes it maybe 10 times more valuable because I knew the overwhelming majority of people wouldn't bother to listen. Since they wouldn't bother to listen, I knew if information existed that was important, that meant that it was a high probability that that information was not reflected in the share price, right? So the kinds of like information that like AI is making those types of things more valuable, right? Because if now people are putting every single transcript into AI, the stuff that can't be put into AI has an even greater probability of containing information that isn't reflected in the share price, right? So it's kind of like, yes, you can use AI, but I almost feel like in so many ways, if you rely too much on AI, you're shooting yourself in the foot. Again, I had a great 2027, or I had a great 2025. 2025, I had a 70% return, right? 70% for the year, which was I was very happy with that. 2026, I tried to use AI to help, analyze things. I'm not doing as well in 2026 as I did in 2025. So I would say that like the overall impact of AI in helping me I would say has not been huge. I don't view it as like it has a great potential. I agree with that, but I haven't necessarily seen it translate into results for me personally.
Yeah, maybe use it as an assistant, but like don't rely on it completely. I think that's what
Yeah,
you're
yeah.
right. Uh, I guess can you if you're okay to share, like, what's your current portfolio of stocks that you have, like, yeah, and why do you have it?
Yeah. I mean, I have four stocks that I have like a large position in right now that are kind of like the core holdings. That would be like Prax, FTAI, Nubank, and Amazon. I'm a little bit nervous about Nubank. I was thinking about potentially trimming that a little bit ahead of earnings just because a lot of stocks have sold off on earnings lately, and Nubank is kind of like in a weird position where it feels like uh, several other companies that are Brazil related have taken like huge hits for no particular reason. People just are a little uncomfortable with Brazil right now. I don't know if that's because there's an election coming up or something like that. Nubank is another one where it doesn't necessarily fit the pattern of the stocks that I like to hold. I don't necessarily like I'm not a Brazil expert and I haven't necessarily read something that makes me think I'm ahead of other analysts. I just think that the unit economics of Nubank are incredible, and the valuation is just like super super cheap. I think is a forward PE of 12 for one of the fastest growing like best run businesses on the planet. So like in theory, it should just go up over time. It's just one of those stocks that you just want to hold forever. Again, doesn't really fit my particular edge, so that's why I'm maybe thinking about trimming that one. Amazon is another one that doesn't fit my edge. That's another one where when I did a bunch of AI research last year, I decided that AI hardware cool, but like not necessarily long term because at a certain point you get like the Cisco problem, right? Cisco was seen as the biggest winner in the dot-com bubble, but eventually everyone built what they needed to build and then Cisco collapsed, right? So like hardware at some point the build stops, right? Even compute power, at some point compute becomes cheap enough that it's not necessarily worth selling. Just becomes another commodity. So the real winner in AI, the research that I was doing was the people that can replace their employees with AI, right? And I think Amazon probably has the most savings potential because they have so many employees that they can replace with AI and effectively create like an impenetrable moat for their business. So I think that that's another one where it doesn't necessarily fit my core philosophy of, but I just want to hold it for other reasons.
And I've seen not just you, like a lot of people invested in Amazon recently, especially in
Yeah,
the March time, like when there was a fall, market fall, right? Like even Seth Klarman, I was following some big names, and everyone started their position.
yeah. I mean, like it has the potential. I think Google's another one. Google's one I have a smaller percentage in, just because I didn't quite get the chance to buy it when it was cheap last year. But like that's another one where the AI long term potential is huge, just because they can integrate the ad network into everything. But like, um, Bridge Bio was the other one that I had a lot of. I sold most of it recently because there was a news story. I forget exactly the name of the company, but there was another company that failed a drug trial for a medicine that would have competed with Bridge Bio, right? I think I posted about this in my Discord. And no analyst that I was aware of modeled this other company as a competitive threat to Bridge Bio. Nobody. I didn't model it as a competitive threat. No one on Twitter was talking about it as a competitive threat. It was just like a company that said they wanted to try it, and the drug failed. And BridgeBio went up 10% in one day on that failure because, oh, the competitor stumbled. And my thought was, well, okay, but this wasn't a competitor that was taken seriously in the first place. And so because of that, and because BridgeBio had actually gone up a very significant amount in the past few weeks before that, I thought, you know what? This is getting close to my fair value. I had long thought that BridgeBio was worth 100. It got all the way, went from like 80 to 90 on that news. And so I said, I'm gonna sell most of my stock right now. So I would love for BridgeBio to have the reaction that it normally has on earnings. I think like 4 of the past 5 earnings, it has done great, but then tanked anyway after earnings. I would love to see that. I would love to see BridgeBio have that same reaction again after earnings. I think earnings are Monday, and I can buy back those shares. If it goes into the mid 70s or something, I would be very happy to buy back those shares. So that was the other one that I was like a core holding, but I sold it at 90 because of that news story.
Sorry.
FTAI, yeah, FTAI is the other one of the four. Ugh, FTAI has been super stressful, honestly. It has, it. I predicted at the end of 2025 it was going to get to 300, and it got to 300 within like the first 5 weeks. I did sell most of it. When it hit 300, I sold 70%. And then I slowly started buying it back as it dipped below 300 again, and it has not performed super well, which is very surprising. At first, I thought that the main concern was that it's being treated like an airline, and people are worried about the price of oil with like the Iran war or something like that. I'm not exactly sure what's going on with them, but yeah, I mean, they got the order, right? They got a $1.4 billion order recently for their new data center. After what was exactly they're taking spent airplane engines and converting them to turbines for AI data center stuff. And they got a $1.4 billion order from SpaceX, we found out recently, right? The order was from SpaceX. Yeah, that's what that's what they're doing. They're making a data center for them, right? So I mean, this is a legit business. This is growing at incredible rates. It's like, and I understand people say, well, okay, it's being treated like an AI stock because it, advertised this business segment or whatever it is. Yeah, I mean that's true, but like again, I think, you could say 1/3 to 20% of the value of this company is related to AI, and the other 80% is other things, right? It's aftermarket aviation, which isn't, really being affected by higher fuel prices in any meaningful way. So I don't know. I mean, that's one that I mean, you can say I stayed in the pool too long, I guess, because I said $300 and it hit the $300 I wanted. I mean, maybe that was my cue to just move on to the next stock. I don't know. I mean, I do genuinely believe in it. Like, I do genuinely believe that it ought to go up. It's just, the price action has just been very, very uncomfortable over the past 4 months, I would say.
I get the point, but the index is also like overheated right now, right? Like it's all just the
Mm.
max one. I don't know like which one to specifically as an non-technical person, like
I mean, that's a really good question, right? Is the index overheated? I mean, people say that now. They said it last year. They said it in 2024. Um, was the index overheated in 2024? Retrospectively, we can say that the answer is no, right? But people were saying that it was at that time. Um, I think if you look at the index now, you can say something like, well, Nvidia, that's an overheated AI stock. And I would say Nvidia has a lower forward PE than Walmart, right? Is Walmart overheated? In my opinion, it is. I think Walmart is dramatically overvalued. But um, Walmart is not driving the index, right? When people complain about the index, they're complaining about Nvidia, despite the fact that Nvidia is actually trading pretty cheaply. And the more sophisticated people will say something like, "Okay, well, Nvidia is cheap right now, but it's cheap because it's actually, pricing in these earnings that are going to crash when people stop building AI because they're going to realize it isn't actually worth it, and like, the whole bubble's going to pop, whatever it is." Like, the more sophisticated people will make this argument that indexes are poorly constituted because they are overweighted tech companies which themselves have overinvested in AI that won't have reasonable returns. That's the more sophisticated argument. Is that true? Probably not. No. We know that AI is like, it is working. We know that it's increasing productivity. You can look at that in all sorts of different things. Like you can use it yourself and do programming, whatever it is. We know that AI is useful. We know that the payback time for NVIDIA's chips is pretty low. 3 years is the estimate that most people were saying. SpaceX gave a report where they said their payback time they estimate is only 1 year for buying an NVIDIA chip, which is nuts when you think about it. So, I mean, I think that unless you're an AI doomer, which I am not, I don't believe that the indexes are overheated. I also think that we have had a pretty phenomenal bull market in stocks, even though interest rates are at elevated levels. And what that tells me is that you have two things. First of all, if the economy dips, we have ample room for rates to go down and create a shock absorber. The second thing is you could have rates just go down anyway, right? Because AI could reduce costs and help trim inflation. You could have oil go down if there's an end to the war. There's sort of political pushing from the Trump administration to lower interest rates because they have I would say, a kind of an ideological belief that lower interest rates are better. Um, I'm not going to pass judgment on the wisdom of that ideology, but I would say if that push was successful, if we did see rates come down, that would be yet another catalyst for stock valuations to go even higher than they are right now. So yeah, I mean, you could say that indexes are bubbly if you wanted to, but I think you can very easily make the other argument and say, no, indexes could just keep running. Um, even if you disagree with some of what's going on, if you say, oh, well, the dollar's in trouble. Okay, well, if the dollar's in trouble, that in some ways makes stocks want to go up even more because you want to have your money in stocks rather than dollars, right? So I don't know.
No, like, what's your cash position, Atticus? Like, do you always maintain a cash position? If yes, like, how much do you?
Yeah, that's
Yeah.
You're asking all the questions that I've been worried about. I've been worried about things for the past couple of weeks. I have more cash than I'm comfortable with. I am like 20% cash right now. I always have just at least a little bit. I have more than I'm comfortable with because, I sold Bridge Bio. I sold 90% of that. I've sold a few other positions that weren't really working, and I haven't really committed to what I'm going to put that money into. Maybe rebuying Bridge Bio if it has an irrational dip. I want to I'm not going to just automatically buy. I'm not going to set a limit order or anything like that. I want to make sure that it's falling on a good report, not a bad report. Um, but like I am a little frustrated with myself that I didn't kind of go all in on buying some of these AI stocks when they had that huge dip like 2 weeks ago, whatever it was. I just kind of left the cash there. Because yeah, I'm not really, the thing that I told myself at the time was I'm not the chart guy. I'm not necessarily gonna try to predict all these like weird
Which AI company
fluctuations.
specifically, if you can?
Okay, so so there are some like really high quality ones out there that really got crushed, right? You can look at AAOI, you can look at Silicon Motion, SIMO. Those are two like infrastructure ones that have just like incredible growth, just incredibly good guidance that they issued recently. You can say what happened there, right? You can look at Bloom Energy. Bloom Energy is like has incredible tech, which everybody loves. Sold out for multiple years, I think. What's the problem, right? The problem is that it's expensive. There was a big dip. Why didn't I buy it, right? It's just because I thought, well, how do I know, that there's not going to be some sort of competitive threat or whatever? I wasn't super familiar with the name. I probably should have taken more time to do like a better deep dive into Bloom Energy, but that obviously has like a huge amount of potential.
Your track record, Atticus. Like, I'm not specifically asking you like how many X you were able to make from your initial position, but just from the audience perspective, what is possible in the markets? Like,
No, no, that's a good question. So between early 2020 to mid 2021, so in about 14 or 15 months, I was able to 8x my money, which was, unbelievable run. Obviously, that was a super retail friendly time. It was, very easy to do well if you were buying anything that was kind of speculative. So yeah, I had an unbelievable period where I got an 8x return in a little over a year. Unfortunately, I did have a 50% drawdown in 2022. A lot of retail people kind of got crushed in 2022, but if you do the math there, that does mean I was still 4 times higher than where I started, right? So, 2022 was pretty brutal, but I did keep most of the gains. And like I said, 2023, 2024, I was kind of in line with the index. 2025, I had a plus 70 year. I was very proud of that. Not sure how 2026 is going to shake out because Prax could make a huge difference. I am a little ahead of the index right now. Um, like I said, I'm a little frustrated with this year just because I feel like some of the stuff, quote, should have worked, right? That didn't quite work. FTAI should be 300 right now. I don't know why it isn't. The fact that like I have AI to analyze things should be working because AI has all this usefulness, but like I don't know, it hasn't actually performed in the way that I hoped it would. So I would say that like how do I put this? I would say, when you say what is possible in the markets, there's always going to be some guy out there. I think every cycle has one of them. Like Serenity is this person right now, right? Serenity is like on Twitter and made like a whatever it is 5,000% return. I don't know what Serenity made, but like there's always going to be somebody that says, "Oh, I did this incredible thing," right? But like it's not necessarily something that you can like aspire to. If I say I made a 70% return, that doesn't mean you're also going to make a 70% return because that was in the past, right? I don't know what I'm going to make this year. I don't know how this year's going to end. Maybe Praxis is going to get bought out for 800 and I'm going to make a bunch of money. Maybe they're going to fail, and not get their drug approved and I'm going to lose a bunch of money. I can't say for sure what's going to happen, but like what I would say is that if you're doing this on your own and you're not sure what you can do, probably the best way to do it is to open a Robinhood account and put a small amount of money in there. Not a lot, not your whole life savings, just put a little bit in first and trust, do your process, do whatever it is, like I said, that reflects whatever your strength is and see if it works. And if it doesn't work, that's okay because you didn't put in a lot of money, right? So if you lose your money, it's okay. If you only put in 2,000 bucks or whatever it is and you lose half of that, you're not going to have to, cry yourself to sleep at night. It's okay. And if it's something that you actually are doing well consistently over time, or at least semi-consistently over time in my case, then you can, gradually put in more and more and feel more comfortable because you have a track record of your own to trust rather than, necessarily modeling what you think your success is based on what I have or some other guru has.
Do you have any like allocation limits? But like he said, like if you have a set allocation target, like you do, you'll get the opportunity of rebalancing. So every time you rebalance, automatically you reap the stocks that performed well, and you buy more of the one that underperformed, right? So do you have anything like that, or would you advise anyone to have that and not cross beyond that allocation targets?
Yeah, that is a really good point. I mean, I do know some investors that have 90% of their portfolio in Tesla, but not because they're Tesla bulls, right? It's because of the philosophy that you mentioned that they don't want to sell the winner, right? They bought into Tesla early, it ballooned into this giant position, and they just decided not to sell, right? And so, yeah, you can make that case that any type of limit is going to be counterproductive because you're going to sell the winner too early. Um, and you can say something like, well, I want no more than 20% of my invested capital will be in a position, but if that position goes up 10x, I'm not going to sell it because it's only 20% of my invested capital. You can come up with all sorts of exceptions to the rules, and I think it's a good argument to be had. I like normally to have no more than like originally I said I didn't want to have more than 40% in one stock. I've since kind of lowered that to 20. Um, and these days, I don't have any stock that's larger than like I think 14 or something like that. Uh, with the biggest being Prax right now. But yeah, I would say that it's kind of less important how diversified you are, and more important to kind of think about the overall health of whatever it is you're trying to do. So, for example, if you have half your portfolio in Amazon and half your portfolio in Google, that is a not very diversified portfolio, right? On the other hand, if you have 10 stocks and all 10 of them are early stage biotech stocks, the second portfolio is way riskier, right, than the first one. Because even though you have more diversity, because all 10 of the stocks are incredibly high risk stocks, you could have all 10 of those stocks fail and then your portfolio could go down by like 70%, right? Or you could just have a crappy biotech cycle, whatever it is. And, on the other hand, if you're half Amazon, half Google, you're probably going to be fine in the long term. You're probably going to outperform the indexes, right? I mean, let's be realistic here. Um, so it's kind of like, yes, you can talk about position size limits, but I would say it's more important to think about like how risky is this position relative to other stocks, right? And if you have a large number of very risky positions, the fact that you have diversity does not necessarily help you. Even if you say something like, well, okay, it's not all biotech stocks. I have some risky biotech stocks and some risky, like, tiny AI bottleneck stocks. It's like, no, that's still not helping you, right? You're not necessarily better off because you have more stocks, right? You're better off if you have companies that you think are genuinely survivable for the long term, rather than like weird momentum stuff, like. So yeah, I would say that, like, first of all, in general, you probably shouldn't have more than like half of your money in one stock, just in case there is some sort of weird thing that happens. Like, yeah, and you can say, okay, then you trim Tesla before it went to 800, whatever it is. Like, it's okay. You can survive that. But I would say that like focusing excessively on managing position size is less important than focusing on the overall amount of like general riskiness you have in the portfolio as a whole.
Like, how do you handle failures, Atticus? Like, because I had to go through one the last month in June, especially. I had like around 25% position in Core Scientific, and I had a great opportunity to like get all the take all the profits out, but then like it went from 29 to like $19 to my buying range. I was like, I don't want to take that much of a risk, and I completely liquidated my positions, and now I feel like an idiot. Like the stock again went up to like 23. So, any experience of that kind of failures that kind of like pushed you out of the markets, or how one should handle even that?
Yeah, I mean, I've had a bunch of failures, right? I had a huge drawdown in 2022, as I mentioned, I had a 50% drawdown. In early 2023, things got even worse. I misplayed the regional bank crisis, where you know, I bought First Republic and then that went under. Um, and I would say that the first thing is, you know, I'm definitely an emotional person. I can't say I'm a robot. I don't care about numbers. No, I care. I'm emotional. I would. It's painful. I'm not going to pretend otherwise. I'm not necessarily the best person for managing my own emotions, and I've definitely made mistakes based on that. Sometimes I do things well. I'll give you an example of me doing things well. I made a podcast about this. Um, there was a company that I bought called Home Point Capital in 2021, and it had an earnings report where the CEO said, the whatever, I think, what did he say exactly? I think he said, um, the margins of our business have come down so much that we are functionally break even. And that's a kind of jargony phrase, but it basically meant they can't make money anymore, right? And I thought to myself, okay, now the earnings report itself was a beat, but when I looked into the report, they gave themselves a credit, a non-cash credit for an increase in the value of an investment that they had. And so that was where the beat came from. So I realized that the beat was effectively fake, right? It wasn't necessarily related to the business. And on a forward basis, the CEO said effectively the business wasn't making money anymore. I was down 11% on this stock at the time this report hit. And the stock I think was up like 2% pre-market because of the fake beat. And I thought, if I sell right now, I am locking in 11% loss, but I believe that there's probably going to be more downside ahead. And so I thought, I actually want to sell everything pre-market because I don't like what the CEO said on that call, and I think that the beat is fake, basically. It doesn't. I didn't like having the 11% loss, but I thought I have to be objective here, and I have to say it's not about recovering the 11% loss. It's about saying, what do I think is going to happen in the future? I sold the entire thing. I took the 11% loss. Within 2 days, the stock fell 50%. So yeah, that was definitely the right call to do. Yeah, because people didn't like what he had to say on that call, right? He didn't. No, nobody likes saying the business isn't making money anymore. So yeah, I would say that like you can never really have the goal of being emotionless. It's not really feasible, at least not for me. But the thing I would always say is, it's more important to make money than it is to be right. And that means that occasionally you have to admit you made a mistake. Occasionally you have to say, okay, maybe this isn't recoverable. Maybe this company is not going to get better. Listen to the report. Ask yourself, would you buy this stock right now if you didn't have it? If the answer is no, you probably should sell at least some of what you have.
Yeah, but sometimes markets are very confusing. Like you believe whatever decision that you took is right, but like the next day it goes up. It's
Yeah.
so confusing. You have to be on your toes all the time, it seems.
Yeah, I mean, you have to be on your toes. I would say that like the move in general is like I would say definitely be aware of what's going on, but you don't have to necessarily like trade every day. Like most people trade too often. If you feel that you have that gambling itch and you have to trade, the probably the smartest way to do it, I think there's a phrase called sin a little, right? Where you indulge to get it out of your system. Trade one share, right? If you have to be a gambler, trade one share of the stock back and forth and make yourself feel good. Hey, I made 50 cents trading the stock, right? But like you don't have to jump in and out of the whole position every day, just because you're watching a chart or whatever. It's not necessary to do that.
Any investment sources or knowledge materials that how do you keep yourself updated, Atticus? So for any
Yeah.
like yeah industries.
Well,
Or,
there's a lot of stuff out there that I would consider to be like almost worse than educational, anti-educational, I guess. Like, again, I don't want to clown on people too much, but there's like a newsletter called Semi Analytics. Have you heard of them? Semi Analytics is like a super influential podcast for semiconductor investors, and they have posted some stuff that's just unbelievably um, whatever you call anti-educational, right? Like I think it was in early 2025 they posted this huge piece talking about the crash in CPU rental rates, and they said that stocks like Nebius were not going to make money. Obviously, that just didn't work out, right? But they did this huge detailed thing on it, and it seemed like it made sense. But I remember reading this and thinking, like, are people taking this seriously? And apparently, a lot of people were, right? Nebius fell like massively in early 2025, right? Um, and so yeah, it's very difficult because there's a lot of stuff that seems informative. It's written by experts, and it just kind of reflects the weird conventional wisdom of the cycle. And if you're following that, you're almost guaranteed to not outperform. So yeah, it's very, very difficult to keep yourself informed in a way that's useful and not just kind of following the herd here. Um, and So I would say stay away from like the big ticket newsletters. Don't necessarily use that to keep yourself informed. Definitely stay away from like the financial TV shows and things like that. When a CEO kind of appears on a TV show, sometimes people call that like the top, right? Because that's just kind of the peak in sentiment. Um, I would say the single best source is reading reports. I would say. I would also say that like you can kind of use yourself as a resource, right? Peter Lynch said that you are an expert in whatever it is that you like, right? Um, Maybe you're someone that has a great passion in food, and then you could learn more about stocks that are related to restaurants. Maybe you're someone that has a great passion in apparel, and then you can learn about clothing stocks or whatever it is. You might yourself, without really even being aware of it, happen to be someone that is an expert in some particular category and you can understand products on a high level. I would say that I missed the boat on that myself, right? I really loved Robinhood as has, in my opinion, the best user interface of any investment app. Did I buy Robinhood stock? No. right? Because I thought, well, the earnings are inconsistent. They rely too much on kind of predatory fees for crypto trading. The CEO is kind of weird. I'm not going to buy this stock, even though I recognize it's the best product in the world. I missed the boat, right? I could have bought Robinhood when it was $11 and it went all the way to 100. Why didn't I do that? Because I didn't lean on my own expertise understanding the quality of that product, right? So I would say that like the financial analysis that I read saying that Robinhood's earnings were lumpy and inconsistent because they relied too heavily on things like crypto, that took away from my actual knowledge, which was Robinhood has the best product for investing, period, right? And so like that's one of the things that's very difficult. I think it's very difficult for me to like tell people, "Oh, you should educate yourself by doing reading," when so much of what I've read has been counterproductive to actionable investment information. It's just very difficult. It's very difficult to um, educate yourself in a way that actually improves your results.
Right. Sometimes even I've felt the same, like reading a lot of theoretical materials, but none of them would have made a big impact. Like for me, what I worked was like following people like you, how you kind of like handle situations and like what's your approach basically, not to copy it, but like understand how you guys think. So
Yeah.
not just so that kind of like helped me in realistically. The books kind of gives you an idea, but like the playing in the market itself is a self education, is what I believe. But along those lines, I found like some of the things very useful for me, which was which was a game changer for me, especially the 13F filings, right? The websites like DataRoom or Insider Monkey, like what big fund houses invest in, those kind of things. At least those act to me as a starting point to like find the stocks, because I'm a non-US person. Like when I moved to the US, like I am not very well aware of the companies here, so those 13 filings are a good starting point for me. So something like that which the average investor could take advantage of is what I'm expecting from you. Like, do you have anything like that?
Yeah, I mean, you can use Seeking Alpha as an interesting resource. I mean, they often have transcripts of investor presentations, which is useful. I would say definitely take the analysis that you see as more of a reflection of what the crowd is saying than a prediction of the future. But even reflecting what the crowd is saying can be helpful. I think it's very important to kind of understand how to evaluate information more than it is to kind of consume as much information as possible. So let me give you a really good example. If you go on Seeking Alpha right now and you go to Prax, there's an article from maybe 6 months ago by a guy who gave it a hold rating. Like I said, I don't want to clown on people too much. I'm clowning on a lot of people today, but I think it's important. And if you look through his information on the bear case, he said that he thinks that the price of Ulixa is only going to be between $15,000 and $40,000, right? And so he said if you do the math, since this is the price that he believes it's likely to be, this price range, they're not going to hit the sales targets. Now, this is very important information. It's not an important prediction of the future because this is just some guy, right? This is a guy who has an opinion that is effectively a bear case. So your job as an investor isn't to take what he said as gospel, it's to take what he said as a reflection of what the market is pricing Prax at that particular moment. So when I read that article and then I read a Goldman Sachs fireside chat with the CEO in June after that article was published, and the CEO was asked flat out by Goldman Sachs, "What are you going to charge?" He said somewhere between $50,000 and $100,000. That is dramatically higher than what the Seeking Alpha article wrote. So, in other words, this proved that the bear case was wrong. I mean, again, assuming the CEO isn't just making stuff up, right? But again, CEOs aren't allowed to do that. If he says he's going to charge between $50,000 and $100,000, that is what he's going to do. Um, so it's important, like I said, you can spend time reading more, but it's important to understand how you're processing what you read. If I had just taken the Seeking Alpha guy's information as gospel, I would say, okay, Prax isn't a good stock. Instead, you have to take this information and say, okay, that's what other people think, right? Are they correct or are they incorrect? If they are correct, okay, that's good. If they're incorrect, that's very important because what it tells you is that the stock price is probably reflecting an expectation which is different from reality. And when that closes, that's what's going to bring the stock price up, right? So that's like if the stock's already well liked and it has good news, it might not go up as much as you want. Maybe that's what's happening with FTAI, right? Maybe everyone understands the opportunity too well and there's no alpha left. And that's why it's not going up on good news anymore, right? Prax is maybe more likely to go up on good news because people don't fully appreciate it. And so, yeah, it's you can spend time educating yourself. Go ahead, educate yourself. I'm not going to dissuade anyone from doing that, but I think it's much more important to put what you learn into context rather than treating it as purely information to like process and accept. It's more like many times you have to start with the expectation that a lot of what you're reading is just wrong.
Just, I think we're in the closing session, but like I just want to ask you like a philosophical question, like out of the investments and stuffs, like so, what are you heading towards? Like, do you have like a target beyond which once I reach this figure, like I'll be retired, or like you have something else to do, or you'll be doing this forever? Like, where are you
No,
heading?
you're asking a great question. I was literally just talking, with my wife about this the other day, right? I was literally talking about this. I would love to retire early. I'm a big fan of the fire people, whatever you want to call it, the retire early people. I would love to do that. I'm good at this, but I don't consider this to be my passion. I don't consider this to be something that brings me a huge amount of joy. I do it because I'm good at it and I want to make some money. But yeah, I would love to hit a certain target. I actually think I'm close-ish. I think if I had another year or two, like 2025, I would be there. And then I would be happy to hang up my hat, retire, put all my money in an index fund or some sort of um, bond fund or something like that, and just move to an island or something, and just kind of, you know, just kind of check out. I would say if how do I put this? Money is not necessarily something that you should accumulate for the sake of accumulating it. You're not a dragon. You're not going to sit on a pile of gold, right? The point of money is to be able to use it for something. It could be buying a house, it could be early retirement, it could be funding your child's education, whatever it is. Those
Food
things are
for
the
whatever
goal.
you want to do. Yeah.
Yeah, exactly. And I would say that if at some point you are thinking that your motivation is ego, if you're thinking, well, I want to make more money than anyone else, I want to be the next Warren Buffett, I want to prove I can beat these other people. If you have woken up one day and that is your motive, you probably need to reevaluate your life a little bit because that should never be your motive when you're doing this type of thing. You're doing this type of thing because the money can make some sort of material impact on your life. And if you've gone into that other direction, it probably means, first of all, you maybe need to tweak your priorities a little bit. But second of all, I think it also dramatically increases the chances you're going to make some sort of terrible mistake. The reason why I say that is because if you're up 60% and you have a buddy that's up 80% and your goal is to beat that friend, you're probably going to be more motivated to take some type of stupid risk that could blow up your account when you should say, wow, I'm up 60%, that's great, and not care about your friend, right? So that's what I mean by like ego is, it's toxic in a variety of different ways. You should just be comfortable with money. Don't think of money as the goal. Think of it as just, something you might need to do in order to improve your life, and that's it. I'm not going to do this forever. I'm going to stop. And if what I'm doing works out well, hopefully I'm going to stop soon, like within a year or two.
Do you have any other interests to pursue after this?
Yes. I mean, like I said, my background is politics. That was what I originally did. I'm kind of glad I'm not in that industry anymore. That's really soul crushing in a different way. But the other thing that I did was, creative writing. I did indie video game design. If I was retired, if I had enough money to just live off of the interest and dividends, which I think, like I said, maybe I'm close to doing if I was in a low cost country. Um, then yeah, I would love to just, make indie games or write novels, and just never open Seeking Alpha again. That's what I'd do.
Before we close this article, so any final thoughts on like Prax and FTI where I have like a lot of hopes. So would you recommend anyone to just like any like long-term targets for FTI, Prax? I got a detailed insight from your videos and stuff, but anything about FTI for the long term? Am I
Sure.
still? Yeah.
Yeah. So FTAI is really interesting, right? Like I said, I think you can. I did a video that was discussing my valuation philosophy because somebody asked about this. I don't know if it was you or somebody else. Somebody asked me to do that, so I made a whole video last year, and there was an analyst that said that FTAI was worth $300 even without FTAI power. Right? I added 20% onto that for FTAI power, so 360 by the end of this year, 480 by the end of 2027, and 600 by the end of 2028. That was this kind of preliminary targets I had in my head. Um, and it's not really clear exactly, how much they're going to be able to sustain the F-type power thing, right? They said in the earnings call that's going to grow by, 100 units in 2027 and by multiples thereafter. How much is multiples? They also mentioned that they could do custom power generation with like, different types of turbines for different types of use cases, et cetera, et cetera. It's not clear if there's going to be, nuclear coming online at some point. Everyone says that there is. My expectation is anything nuclear related is going to have a delay by at least a couple of years because nuclear always takes a lot longer to build than anyone expects it to. Um, so it's not really clear how durable that earnings stream is. That's kind of the first problem in long-term modeling for them. Um, what I would say is that you probably don't have to worry about that. The reason why that is because FTAI is at the price it is right now. I think right now it's like 217 or something. If FTAI was already 330, we could have this case of, well, maybe the risk reward isn't good anymore. Maybe it's only going to go up by 10% if, my target is 360 or something. Um, if FTAI goes above 300, then it becomes a lot more important to try to judge FTAI Power's long-term contributions, and that's going to be a little difficult to model. It's not exactly clear how durable it is, so what multiple to give it. But I would say that, anything below 300, you're effectively getting the FTAI Power stuff for free. So you don't have to worry that much about that. It is a very well run company, and I think the earnings stream from the SCI, which is, for those of you who don't know, they are managing a fund that invests in airplane leasing, and they are requiring those airplanes to all have their, airplanes serviced by FTAI. So they get multiple streams from it. They get a management fee, they own 16% of it, and in addition, they dramatically increase the amount of earnings they get from servicing because they control these airplanes. So it's almost like being an airline, but they don't have to worry about all the costs of being an airline. It's a very, very clever idea that they came up with. That earnings stream is itself probably worth a higher multiple than a traditional airplane lessor would have, for a variety of reasons. So that's the reason why I think that the earnings stream is probably worth that. Somebody asked something recently on the Discord. They said, "How do you judge this? Right? How do you judge that it's worth this?" And I said, "There's other companies like Heiko and TTG, which are similar. They're similar like aviation aftermarket industrial stocks, right? And both of those stocks are trading at higher multiples and lower projected growth than FTAI is. Even if you take FTAI power out completely, even if you call FTAI power a zero, both of those stocks are still trading at more expensive multiples and have less growth than FTAI's core business. So I would say as long as that's true, FTAI probably still has some upside left. Um, Again, I'm not a chart guy. I'm not necessarily going to say that because the price action, because the chart looks a little funky, that means that the stock is doomed. There's always stocks that have weird consolidation periods and then break out later. It has made me feel frustrated. But yeah, I would say that like the gravity of the fundamentals is going to win out at some point here, unless there's some weird thing that happens to the company. So I would say that like if you're trying to model it, focus on that aspect of it, if that makes sense.
Like just for anyone who's new, if there's still value left in FTAI, like I think it's a good place to like start their research, right? Like FTAI or PRAX, I think would be the final ones which we'll leave in this conversation, which anyone could uh, dig a little bit. And so Atticus, so I think I'll leave your Discord channel if you are interested.
Sure.
Maybe I'll leave your Discord
Absolutely.
channel as well as a YouTube channel in the description so that anyone can find you there. Let me like send me a link or something like which I can tag it in the video so that if anyone wants to find about you, they can learn more about you, right? So that is one thing. And any final piece of words that you want to leave before we close?
Sure, yeah. If you want to join the Discord or whatever and chat with me, I'm always happy to chat. And I'm not necessarily looking for like followers, right? I'm not charging anything. I don't have a subscription on anything that I do. I'm not looking for people that are just gonna sort of say like, "Hey, like good job with that trade" or whatever it is. Like, if you're interested in chatting with me just because you want to, like I said, be part of the journey of just trying to understand things, just trying to have like-minded people to bounce ideas off of, I am happy to do that. I haven't seen a lot of spaces like that lately. They used to be super popular. I feel like it's kind of declined as people have moved toward more of a monetization model, more of paywall type model. But yeah, I'm one of the last people that's still doing that. Just wanted to chat with people about ideas. So if that's the type of thing that you're interested in, actually trying to learn and just trying to bounce ideas off each other, happy to hear what you have to say.
That's a great thing, Atticus. Thank you so much. Keep posting your videos and research. There are still a lot of people like me spend their job, like time in their job, and also doesn't have time to like research. And so we can also learn along with your research, right? So keep doing it. And thank you so much for agreeing to do this.
Sure thing.
Hopefully you enjoyed this.
Yeah, thank you for having me.
Thank you. Have a good weekend. Bye bye.
Bye bye.